Tesla is considering setting up a lithium battery plant in Texas to fight off rising battery prices. Will this send the stock flying? Keep watching while I take you through recent news as well as my chart analysis and price prediction for the stock. But before we do that, subscribe to our channel Stocks 101 for regular stock market updates. Tesla has been seeking a property tax break in Texas according to a recent filing. It said that they are planning to develop a lithium hydroxide refining plant on one of the coasts in Texas, which will be equipped enough to make other forms of batteries as well, reducing Tesla's operational cost. This can help Tesla enter in the B2B business as well, but we doubt that is going to happen. Most likely, Tesla will make batteries exclusive to Tesla vehicles and they might cut some vehicle prices as well once it's done. Apart from that, Berlin's authorities have delayed voting for Tesla's plea asking for expanding the gigafactory in another 250 acres, which has given a small dent to Tesla's dream of pushing a million vehicles per year out of that factory. But it will soon be sorted, so you shouldn't worry. Now let's analyze the stock in detail by getting into the charts. So as you guys can see right here, we're now in the 1-day chart for Tesla. First, we'll analyze the 1-day chart, then 1 hour, and as always, we'll end it off with the 5-minute chart. So first things first, you guys can clearly see that this was the day when the entire Nasdaq crashed pretty badly, but after that, Tesla recovered pretty well. I would say we already recovered to our past levels over here. This is a good indication since we've been in somewhat of a short-term or rather a positional bearish trend for the past 11 months, as you guys can see. Let me draw that real quick for you. You can clearly see that we've been somewhat of a bearish trend since then, but we're trying to break out of that soon because as you guys can see, the baseline for the stock still remains bullish. Right, as you guys can see, the baseline is still bullish. So we're kind of squeezing into this range over here. We made a similar move over here, as you guys can see. We squeezed into this range. So this range over here was pretty much a similar situation to what's happening right now. And as you guys can see, we are currently in a range over here, which would be somewhat like this. Right, this would be the lower baseline, I would say, and this would be the upper baseline, somewhere around 315, 310, $315. And my analysis suggests that we will continue this particular rise. And as you guys can see, we will probably break this upper level as well, breaking this bearish trend once and for all. And then we might continue the bullish momentum. Because we can clearly see in past incidents as well that when the stock rises by a long, percentage, by a large percentage, we do get some sideways market time, some sideways bullish trends, and before that we obviously get large pullbacks. So this is exactly what's going on. We're getting a large pullback, and after that now we are in the sideways bullish trend. And once the sideways bullish trend is over, we'll probably do something like this. So we'll go up slowly and then we might get a pump towards the $400 level. And once we break this high that we made over here, right, this probably would be a strong resistance because there would be a lot of short sellers over here and a lot of people that have placed, limit sell orders, which would get triggered between the $400 to the $420 range. So what exactly is my price prediction for the stock? Well, I believe that it will stay sideways until we get our earnings report. And if the earnings report is positive, then we'll probably bounce back somewhere around the $325, $330 range. And once we get here, we'll probably stay around $350 by the end of this year. So in my opinion, there is about a 75 or rather a 70% chance for a bullish trend and about a 30%, 25-30% chance for it to go down. And if it in case goes down, it would probably come down to the $250 range because then again, I've already told you that it's a pretty strong support zone. But before that, it would have to break this level that we just talked about, this double bottom level at $265. So now to analyze the swing trade, let's quickly move on into the 1-hour chart. So as you guys can see right here, we're now in the 1-hour chart, and right off the bat, you guys can see that there is somewhat of a head and shoulders pattern cooking up over here, right? So once this is done, I believe that the stock will go up by taking a pullback. And we've already talked about how the buyer pressure is pretty good and how we've already recovered from this Nasdaq market crash. So considering all of that, I would probably deem the stock as a good buy for the short term, but obviously this is not financial advice. So if I were to open up a swing trade over here, my stop loss would be somewhere around here at $290 and my target would be over here around $320, which would indicate about, I guess, a 2:1 trade, right? So that's 3.8 or rather 4% downside and about 6% upside, 5.5%. So that's about a 1 to 1.5 ratio trade. But no matter what side you take, whether you're with the bulls or the bears, always remember to put up a stop loss because your capital can get wiped off any single day, if you don't use a stop loss. With that, I don't think there's anything else left in the 1 hour chart, so let's jump into the 5-minute chart to analyze it in detail. As you guys can see right here, we're now in the 5-minute chart, and right off the bat, you guys can see that we opened up in a gap down on 16th September because, as you guys can see, we were pretty much continuing this bearish trend that we set in the past day. And if we apply the same logic to 16th September and Monday, I believe that Monday will be in a gap up. So a good gap up would probably be somewhere around the level of, I would say, $304 or $305, right? So about what percentage is that? About 1%, right? About 0.5% from over here. And once we get that gap up, we'll probably go down a bit before going up, as I already told you guys with the head and shoulder pattern, right? And why do I believe that? Well, it's pretty obvious. Once we get in a gap up, a lot of limit sell orders will be triggered and people will start selling the stock. The people who bought it earlier, like bulls like you basically, will probably book their profits over here. Short-term traders will book their profits. Aftermarket traders will book their profits as well. And that is why there will be a pretty obvious pullback into the, I would say, $300 territory. And obviously, once we're back in the $300 range on the $300 support, we'll bounce back and then we might continue higher, breaking this high that we made over here at $309. So on an intraday basis, I believe that on Monday, the stock would reach a price of about $305 in the end, right? We would be pretty volatile over here and then we'll reach a price of $305 before ending of the market. If I were to give you guys a summary of my analysis in just simple words, it's basically that the stock will continue to go up in the short term and squeeze towards these levels of $310 and $20. Once we are able to break these resistance levels, then we might see some more bullish moves. But until then, I believe that the stock will probably be range bound. And after that, if it gets rejected over here, then we might see a small pullback. But other than that, the stock is good. And anyways, you guys already know that Tesla will go up. But then again, remember that I could be wrong, so this is definitely not financial advice. You should always do your own research before you trade. If you enjoyed my analysis, however, be sure to hit the like button and subscribe to our channel Stox 101 for more such videos. With that being said, as always, I'll see you guys in the next one.